Assalamu alaikum students. Now the week 3 and the third recording. Now we will discuss about the debit and credit interest. In last slides, in last video, you discuss about the why the asset side is the debit and liability and honors side is credit. Okay. Now we make the some rule. Basically, we have a number of account. In your previous if I go back again in a back slides I'm talking about the assets. Assets are the cash, note receivable, account receivable, supplies, office equipment, building and land. Okay, we have almost in this example, in this balance sheet, we have almost seven account. Okay, and if we talk about the liability have also a three account. Maybe the some company are using the liability account or a 10 and a 15. Similarly, in our honor equity, we have just two capital and retain earning. But in case of a asset, in case of a liability, in case of a expense especially, we have a number of account and it will be increases at time to time. Okay, if we talk about the which account will be debit when we will record and which account will be credit when we will record it, then it is a very difficult, because if a company have a 20 account, we need to be uh, basically remember about the 20 rule of these account debit and credit. If we talk about the if a company have a 50 account, different 50 account, then you need to learn about that. You need to be sick about the 50 debit credit rule of each account. But if we all discuss these debit credit rule behalf of the help of the head of account mean to say your chart of account mean to say asset, liability, honor equity, revenue and expense, then we can apply our debit and credit rule on these chart of account, these five head, and we will be conclude that all asset, whenever it will all asset, even the cash, even the note receivable, account receivable, office and land, building, whatever the 20 asset of a company, but their debit and credit rule with the same. Okay, because we are basically applying the rule of a asset. When asset will be increased and whenever the asset will be decreased, and what we will do when asset will be increased, what we will do, it may be debit or a credit. Okay, similarly when asset will be decreased, what we do, we write it in a debit or a credit. Okay, in your next slide we are similarly discussing about these rules. Debit and credit effect on the following assets, liability and honor equity. By the default nature of account, you know about the assets are the debit. Okay, asset have a debit side. Okay, and the liability and honor equity is a credit. I am going to providing a tip in recording to to reminder to these account. Every Listen carefully. Every increasing trend mean to say, if you want to say asset are increase, liability are increase, honor equity are going to be increased. Okay, it is an increasing trend. Increasing trend are always be related to the default nature of account. Again, increasing trend always be have a link to the default nature of account. Now I can going to apply this rule again. Assets are your debit for increasing. Okay, whenever you increase the asset, you will find the asset are going to be increased. Then what we will do, we just put the debit side. Okay, now again, the asset are by default is a debit. The increasing trend of asset is a debit. Similarly, credit for decreasing asset. Whenever asset are decreased, okay, then we will write in a credit side. Okay, then we will say it is a credit. Okay, class. Similarly, liability and equities, honor equity, it is a by default is a credit. So the increase in liability, increase in honor equity. Okay, it will be find as a credit side. And similarly, whenever we say your liability and your honor equity are going to be decreased, then we write in a debit side. Okay? then we find it is an asset. It is a debit and credit of learn and keep user again the double concept half of these assets and credit balances and debit double concept access tablet closing. Okay, if you find that your your assets are going to be credit means your calculation will be wrong. Okay, you should revise, you should recalculate. Okay, your all information, recalculate your then you will find it tablet. Similarly, liability and honor equity always have a credit balances. If you say, my assets are going to be credit balance, then where you put your asset? Because asset side is this one. In accounting equation, asset is on a left hand side. In a credit balance, you could put your asset in a right hand side. Then your accounting equation creating an unbalanced balancing technique. It is a wrong concept. Okay, maybe your question is wrong. Okay, if you find all calculation you are repeating two and three times, but the your calculation, according to your calculation, your asset, any asset showing the credit balance, and you need to put in your financial statement, it means something is wrong in a question, or maybe the question is not providing you full information, you people. Okay, but the accounting standards by the general accepted accounting principle, your asset always be close, having a debit balances, and your liability and honor equity have a credit balances. Fine, class. Now, how you pass the journal entry? Journal entry is the first generalization step in actual accounting system. Transaction are initially recorded in a journal, and how we have a basically four step of first thing is that four column, you make a four column like in your excel sheet. Okay, separate sheet like date, you write there is the date 2015 and January 20, you can write there a serial number. Okay, that's the first information, first column where you put the date. Second is the account detail and explanation, mean to say which account are going to be used. Okay, for every transaction I already at least two account. Okay, basically these two account is showing the balance of a debit and credit. Okay, one account should be a debit balance and second will be the credit, so that your accounting equation will be complete. Fine. Now the second column is representing the account title and explanation, like in a honor investor cash in a business. That a simple, very primary business transaction. First transaction is normally we use that honor going to be invest in a business. Right now in this overnight company, you already discussed in early slides that honor of a overnight company going to be invest in a business $80,000. Fine. Now, honor is the investor's cash in business 80,000. Now, what is the 80,000? What account come in your mind? What is the 80,000? That is the investment, but that is the cash. Okay. Now, one thing is that cash account will be occur. Okay. Now, right there. No, I go back. Now, cash. Cash is your, what is the cash? Cash is our asset. Right now applying the double credit rule class. Okay, cash is a asset and it is going to be increased. In the with the help of cash, your asset are going to be increased. Then what we do it, we already learn, we make a plan, we make a rule that when asset will be increased, then we put in a debit side and we will write it in a debit. Okay, so the cash account in your first transaction, your cash is a debit 80,000. Similarly, your capital stock, it is a part of honor equity. Am I right? Yes, it is a part of a capital stock, is a part of a honor equity. And honor equity is a by nature is a credit balance, and we learn that the increasing in honor equity, we will write it is a credit. Right now, with the help of the capital stock 80,000, honor are investing 80,000, and we write there in a stock, in a capital stock 80,000. How much a dollar, how much rupees are invested from the honors side? How much money is invested? 80,000. Now you need to be right in capital stock 80,000. Okay, 80,000 is a capital stock, and it is a part of honor equity. Behalf of the capital stock, honor equity going to be increase. Honor equity going to be increase. Then what will we do? Honor equity basically going to be increased, then we will need to be right, it is a honor equity is going to be increased, and increase in honor equity we always write the credit, so we write there is the credit balance. Okay, it is a debit and a credit, four column. First is the date, second is the account title and explanation, account that is going to be used, and then debit and credit column, which amount is debit, which account and amount is debit, and which amount credit. Okay, it is the first transaction for journal entries, that is a method to record the journal entries. Be fine. Now I come on and second, posting journal entry into the ledger. Now look, the cash and the 80,000 is the amount. Now I'm going to make the journal ledger cash. Okay, journal ledger cash we are making it. Now date is the again same date. Okay, you are right it. And the debit balance is the 80,000. No credit value in a first transaction of a cash. The balance is the 80,000. It is a computerized ledger. It is a computerized ledger. How we can make it? Just the title of a cash. Okay, title of a cash, it is a general ledger meaning the cash, and the first date, I mean January 20. Okay, first transaction is the reference of 80,000 debited, the balance is the 80,000. Fine. Now we go in the next. Yes, now we make the another ledger account. That's ledger account showing the capital stock. Okay, and the capital stock is again the same amount 80,000. It is a credited, and balance is a credit balance. Okay, it is a posting. Whenever we are putting the value of a journal ledger capital and journal ledger of cash, we are basically creating a balance of each account, and this is called the posting journal entry into appropriate ledger account. Fine class, it is a way where that you learn about the journal entry to jump the journal ledger. Fine. Now also we can make as a manual accounting system as a form of a T. Okay, look here, it is a form of a T, journal ledger of cash. Again, the date is the 20 and the 80,000. Fine. 80,000 is the debit, and the balance is the, I mean to say 80,000. But let's suppose in 21 you are going to be purchase a land and a building, 52,000 is going to be out because you pay the cash. Okay, now it is a now it is a credit. Okay, 82,000 cash is a credit. The what will be the balance? It show that your cash ledger show 28,000 balance. Okay, T account are also a simplified version of a ledger account that only show the debit and credit column, no more. Okay, that is a red form that showing the just debit and credit, but balance at the end you will be calculate. Fine class. Now it is up to you. You are using the T ledger account, whatever, and manual accounting manual accounting, and simply if you want to make a software, then you normally use not a T accounting, you use this whole concept of a spreadsheet in which you put the date, you put the debit and credit column, and at the end you will be calculate the balances. Okay, now we come again the what is the net income, and talk about the debit credit rule of a net income. You already familiar the I mean to say debit and credit, and the definition of a net income. Again, net income is the earning either an asset in increase and liability is also decrease. Okay, net income always result in the increase of honor equity in the form of a net income, always increase the honor equity, and your asset are increased with the earning. Fine. Net income is not an asset, it is increased honor equity from the profit of a business. What is the net income right now? retain earning. Now we will be helped from the by the rule of a net debit and credit, capital stock and a retain earning. On a honor equity, we have found the capital stock and a retain earning. Balance of a retain earning account represent the total net income, okay, of the corporation over the entire lifetime of a business, plus all the amounts which have been distributed to the stakeholder as a dividend. Fine, that we are going to be provide the dividend to the shareholder. That's overall your earning is a net earning or a retain earning. From the retain earning account you can using the less the dividend, that is profit, share profit that distribute among the shareholder. Fine, it is the asset is equal to liability plus honor equity. Now, revenue, that's the price of goods and services rendered to during the given accounting period. Increase honor equity, then what will we do? It is always be credit, okay? Because it will be increase the honor equity, always be credit. Expense is the cost of goods and services used into the process of earning revenue, decrease honor equity. Fine. Now, according to the matching principle, when to record the revenue that should be recognized at the time uh, goods are sold and services are rendered. When revenue will be recognized? Revenue will be recognized simply when you will provide your services to the customer and the goods are delivered to the customer. Then what will be happen? Your cash will become, maybe it will be on a credit sale, okay, but it account should be a revenue are going to be generated. Fine. If we talk about the expense, that should be recorded in a period in which they are used. It is a form of a consumption, it's a form of a using the thing, it will be generate the expense. Okay. Now, the accrual based accounting, realization and a matching principle basically show the accrual based accounting. Like the current accounting period, January 1, 2015 to December 2015. Fine. It is a current accounting period. Cash is received or a paid here. Okay. It is a current scenario. Or income statement report the revenue or expense here. If the cash is received, it means your income is a income statement report creating a revenue and expense, okay. But in a future accounting period, January 1 to 2016, December 1 to 2016, income statement report revenue or expense are here, cash is received or are paid here. Mean to say your income statement is come first, but your cash is received on a later. But it is accrual based accounting where you are doing to pay in future time, but in a current period you will be write up the revenue and expense are recognized and matching, okay. That is a revenue and expense principle. Right now I am going to be wind up this lectures, and in our next lecture we will discuss about the detail how we will record the business transaction. Allah Hafiz, take care.